So the two that I've been talking about for a little while that I would hope to see in the very near future are a proposal around enhanced transparency of ATSs, and again, always around the operation of ATSs, not necessarily the trading activity, although I think Rick should speak to the number of good things that FINRA has done in the space in that space. And the other is greater transparency around order routing obligations, especially institutional order routing obligations. So those two pieces, which we've been talking about for a little while, are plugging along, and we hope to have them out for comment in the very near future. The one that sort of rolls on after that I think continues to be important, and actually I think, again, in terms of speaking about August 24th as fortunate in terms of providing us data, it fits in this category too, is an anti-disruptive trading rule, right? And so questions about whether there are certain times when activity that is otherwise perfectly legal by certain market participants should be prohibited just because they destabilize the market. That's the philosophy behind the anti-disruptive trading rule. Those things defined very narrowly, of course. Good to see whether we find data in August 24th that certain issues were subject to volatility because of certain types of strategies that one could view in hindsight as destabilizing.
A lot of people are still trying to kind of piece together what exactly that means. Is there like an example you could give of what that strategy might look like?
Yeah, not at a level of detail that you can start programming to it, but I think part of it is we have been spending a lot of time analyzing data to find examples that we think would meet that strategy. But writ large, it would be something that wouldn't look terribly different, although different parameters from the way the sort of the remnants of the tick test rule look, right? So if you've got a fair amount of movement in a specific issue in a specific direction in a short period of time, certain strategies that exacerbate volatility in that direction should be constrained.
So like if the stock's already 10% down, there's a trigger that's hit, and at that point in time you shouldn't sell the hell out of a name and drive it down a lot farther?
Well, since 10 is probably twice the size of the limit up, limit down band, I'm not sure I would go with 10, but yeah,
SRO tick test, yeah.
Yeah, but yeah, something along those lines.
Awesome. So Rick, on the same thing in terms of ATS transparency, there's an expansion now of that beyond sort of ATSs into the broader realm of all-off exchange trading. Is that moving along? Where do we?
Well, as you know, it was filed in June. We're working through our response to comments. I think that there is generally pretty solid support from the standpoint of increasing that transparency. Steve, thanks for your nice words with respect to the first step on ATS transparency. So our hope is it will move forward. I know there were concerns raised from an industry standpoint of the time frame with respect to the disclosure. We'll keep in looking to respond to the comments, keep having conversations with regard to that. Just to remind folks, the way it splits now is 2 weeks with respect to more liquid NMS securities and 4 weeks, or essentially the month that the industry seems to prefer, with respect to less liquid securities. It also, you are still talking, though it would be nice to move away from this over time, you are still talking about information that's quite gross from the standpoint of its disclosure, not defining between a range of agency and riskless principal trades as well as principal taking trades. It also has a pretty substantial de minimis standard from the standpoint of entities that may be more limited and may be more likely to be in a position of being exposed to concentrated positions that might expose them without much capital to deal with it. Not to be flip, but I'm not seeing a lot of equity positions these days staying around for 2 weeks in the market and not getting liquidated. Maybe I'm missing them, and we'll look to do it. But I think within those contexts with more liquid stocks, we still need some more convincing to think that 2 weeks isn't sufficient enough to want to start providing that disclosure in context. But we are